Hi everyone, hope you're all doing well. Welcome to the most popular video series that I do on the YouTube channel, which is the Stocks I'm Buying December 2024 edition. This is all the US stocks I bought and sold during the 1st of November to the 1st of December. I'll do my UK one in a couple of days time for you guys that want the UK edition. But this is where I go through the stocks I bought and sold. I've done this for a good 8 years on the YouTube channel. It just keeps up the transparency so you guys know every stock that I bought and every stock that I sold. And I did buy a few stocks this month, a lot more than last month, and I did sell a few stocks as well. This month just gone was the most profitable month that I've ever had in the stock market. This is the most profit I've ever locked in and sold during this month, which was really good. Obviously the market has been on fire and a lot of my stocks have done very well as well. So I decided to lock a few profit in during the month. I think there was a good 4 or 5 stocks that I trimmed, and I'll do them towards the back end of the video. But yeah, obviously going really well in the stock market. My portfolio is going really well. So I just balanced it out a little bit, and also I did add a few stocks in when there was a few dips, because this month as well, there was a few dips where I went, that shouldn't have dipped that much, and I bought up on that dip as well, so I'll go through them as well. Hope you enjoyed the video, guys. Hit the like button if you're new around here, subscribe. Let's get started. So here we go, the last ever mention of the Black Friday deal. It does run out this weekend after Sunday, no more. It is gone. The Black Friday deal is finished, so if you do want to get on the Black Friday deal and join the Discord, this is your weekend to do it. After that, no more. It's disappeared, so if you are wanting to do it, get it done this weekend. £44 for the full year. You get access to the Discord. On the Discord, you get 100 exclusive videos in 2025. You get to know what I'm buying and selling in real time. And obviously, you got members of the JKR community to talk to as well, including me. £44, normally £72 for the full year. If you do want to join, send me an email. There's about 100 of you guys that have taken that deal up so far, which has been absolutely amazing. And this is your last chance to get it. And as well as that, it's the last chance to go get the Webull offer, the Black Friday Webull offer that's currently going on. If you join through the link in the description, deposit £100, you get 5 free shares. Hold the £100 in your account for 90 days, and then you'll get another 5 free shares as well. Those free shares are totaling up to around about £30–40, and with that deal as well, you can go sell them shares and get the Black Friday deal with me for free as well. That's a tactical way that you can use it. So if you do want to do that, both of those links will be in the description and in the comment box of this video. And after that, they are gone. Anyway, let's get on to the stocks that I'm buying. And like I said, I do this so you can track along with what I'm buying, what I'm selling, keeps up the transparency. Any moves that I made during the last month will be on this video. And we're going to start with the buying, and then we'll go to the selling at the end of the video. So starting off with the buying, Mercado Libre. I did buy into Mercado Libre. I don't really talk about this stock that much on the YouTube channel, which I probably should do because it's like my 5th largest position in the portfolio. It's done really well for me. I started buying this stock around 2022 when the stock was about $700. Since then, I'm up 188%. I have been averaging up though and making the position larger, because as the company just keeps smashing the numbers, you know, I keep thinking, buy more shares. If they keep executing, all I'm seeing is the upside going up and up and up, and I keep buying some more shares into Mercado Libre. And right now, the stock did have a dip. It did bring out its earnings around about the 6th of November. The stock fell down massively during that time frame. It ended up closing around about 16% down. I think at some points during the day, the stock was actually down like 20% in the day. And I was thinking, this is crazy. This is a drop that shouldn't be happening off these earnings, and I bought the dip. It was quite a big increase on Mercado Libre, and since then the stock has pretty much recovered a lot of the dip, so I'll make you aware of that one. But I did buy the dip in Mercado Libre, and like I said, the stock fell quite a bit off Q3 earnings. I personally don't think they should have dipped off the earnings. Basically what happened in the earnings is Mercado Libre came out and said, yeah, we decided to expand our business slightly, and that meant that we had to do a few investments. That hurt the profitability, but in the long term, it'll mean we have greater revenue and greater profitability. And for some reason, the market threw it out and go, oh, but we wanted the results now. And if you're a long-term investor, you're going, hold on, so you've just said that you're going to make even more profit and revenue in the next few years because of this investment, but now the market's throwing its toys out the pram because it's hurting it in the short term. If you're a long-term investor, those are the dips that you want to really be buying on, and that's what I did. And eventually, some of the long-term investors have come in and bought the dip since then, so it didn't make sense to go buy it. If you don't know what Mercado Libre does, they are basically the Amazon of Latin America. Amazon in Latin America isn't very successful. They haven't been very quick to expand into Latin America, and they were quite slow to build up their distribution network. And what Mercado Libre did is they went, hold on, Amazon have been a bit slow here. If we jump ahead of them and get the distribution set up before Amazon, people are going to be using us before Amazon can set up, and that's what happened. So Mercado Libre did very well because they were ahead of the game from Amazon, and basically you're getting Amazon with Mercado Libre. Also, the other point is that they also have a payment, they're like the PayPal of Latin America. What happened is there wasn't many e-commerce, fintech platforms that people could use. So they also created a fintech platform, so people could use that fintech platform to go buy through Mercado Libre. And the other thing now is that fintech platform, Mercado Pago, is so successful, it's actually being used to go buy other things in Latin America. So we're kind of having the e-commerce boom just kind of start happening in Latin America. And obviously, if you know the size of Latin America, it's a pretty big market. And if you look at some of the fastest growing e-commerce countries out there at the moment, you've got the likes of Mexico in number 6, Argentina at number 7, and I'm not sure how Brazil missed on this list, but Brazil is very close to being on here. And on an FX neutral basis, you can see here, Brazil was growing at pretty good rates at 60%, Mexico growing at 60%, and Argentina growing at 245%. E-commerce was growing at 121%, and fintech is growing at 81%. This is not also including other things that Mercado Libre have going on. So you can see here, they've got a lot of countries with very good growth, very strong e-commerce platform, very good fintech platform, and you'll notice that the total MELI growth is 103%, which is a lot faster than the recent earnings, which was 35%. The reason why is because of the FX impact. If that FX impact was to neutralize a little bit more, the growth on this would actually be even faster. And right now, looking at Mercado Libre, it's currently at 43 forward times earnings. Mercado Libre normally trades somewhere between a 60 to 80 times earnings. So in a year's time, if the company keeps ramping up profitability, which it has been doing, if we look at the past performance of Mercado Libre, it's been absolutely exceptional. We have seen the company grow revenue and profit at a very good rate and should continue as e-commerce keeps expanding going forward. And as this ramps and it goes to 43 times earnings, this company is going to go back up to 60, 80 times earnings. So last time I saw this stock at these sort of levels, I think it was at the start of the year, and I said to you guys at the start of the year, I was like, this is going to rally up a lot towards the back end of the year, and that's exactly what's happened. We've had the rally at the back end of the year, what has happened, and I think the same is set for next year. I would expect Mercado Libre to have a very good year once again last year. It's even better as well because when I bought the stock, obviously I was getting it on a 20% discount. So this company wasn't only just a 43 forward times earnings. We're talking where Mercado Libre on that day went to around about a 36 forward times earnings business. Mercado Libre should not be a 36 forward times earnings business. So I decided to buy up the dip, and I'm happy I did. The next one was Hims and Hers. So yeah, I've been buying Hims and Hers for the first time really since the stock was about $8, $9. And I looked and I thought the valuation is actually not too bad on Hims and Hers. And what also helped during the month, and I'll give you a hint, that Hims and Hers is also going to appear on the sell list as well, is volatility hit Hims and Hers. Since they have been involved in GLP-1, there's been a lot of volatility in the Hims and Hers share price. It seems like maybe a lot of day traders are coming into this stock, and it's causing big swings in the stock where the stock goes from being very undervalued to undervalued. I still think at these highs that you could argue it's undervalued, but these points are very undervalued. And when it's having these major drops in the share price, we've seen the stock fall massively during that time frame. Stock is losing 30% of its value in 2 days. I'm taking advantage of that. And I've been buying the stock when those sort of dips do happen, and I've been adding into my position because I think when the stock is getting towards like the $18 range, I think it's pretty good value. So I did buy at the start of the month, and I did also buy during the 15th of November during that dip. And I'm taking advantage of this volatility over the GLP-1, which only accounts for like 4% of the revenue of the business, but for some reason it's causing the market cap to move by 2 or 3 billion. And when that happens, I think at these sort of levels, it's pretty good value. Now, obviously it's 70 times earnings. When these dips have been going on, we've been talking about Hims and Hers falling down to like 45 times earnings, which I don't think Hims and Hers should be for a company of their standards and level that they've been putting in. Now, if you don't know, Hims and Hers is a telehealth business. They are in a lot of categories, and they are currently expanding their categories going forward, but these are some of the TAMs that they're currently in. The US telehealth market is growing really fast. 23% is expected between 2025 and 2030. This is because of the younger generation that are just wanting to get things online. People do not want to travel out the house. They don't want to go see people. They don't want to lose time. They want easy access. And also, some of these telehealth providers are also being a lot more affordable as well, like Hims and Hers. So they are seeing big explosions in the growth, as you can see here, and it should only continue. Even if there's a lot more competition that comes in the market, Amazon, they should still do quite well. The recent earnings were fantastic. 10 out of 10. All I've seen this company do is amazing earnings after amazing earnings. They just came off 77% year over year growth. And if you look at the subscribers, 44%, they raised the guidance. The adjusted EBIT went from 12.3 million last year up to 51 million this year as well. Looking at the quarter coming up as well, we're just going to see expanded growth once again. We're expecting the EPS to go from 0.05 to 0.22, and we're expecting 90% in the next quarter. So this company isn't even slowing down, they're currently speeding up as they continue. And next year we're expecting nearly a 40% growth year as well next year. And if you look at the execution of the business, fantastic revenue growth as you see here. Free cash flow has been ramping up as well. The company has an amazing balance sheet. There's no debt on there. They sit on a nice, healthy cash balance as well, which they are using to buy back shares. And if this stock ever goes down to like 45 times earnings for a business of Hims quality, you should not be getting a company that's growing 70%, 77% in the last quarter, 40% next year. You shouldn't be getting these businesses at 45 times earnings, guys. This should be a lot higher. And I did buy the dip on Hims & Hers when there was the volatility going on with the stock. Next one's Google. So I have been trying to add into Google. I'm slowly adding in because I do want Google to become my largest position in the stock portfolio. So I'm just doing some small nibbles when I can to go buy it. The only thing with Google is I do want it at about 17 forward times earnings. Right now it's 19 times forward earnings, which is still very good, I think, for a company of this sort of standard. But if I can, I want 17 forward times earnings. But the reason why is Google, when Google gets to 19 times forward earnings, the S&P is currently trading at 30 times earnings. You should not be getting a company of Google standard at these sort of levels when the S&P in the market's trading at 30 times earnings. And in my opinion, it's the best valued big tech out there at the moment. And you look at the recent numbers as well, fantastic. Major EPS beat, revenue growing 15% year over year. I mean, you'd think that at 19 forward times earnings, Google would be slowing down, but 15% is just absolutely insane. You also get a little bit of a dividend here, nothing major, but I thought I'd point it out. And you look at all the growth drivers here, Google Search, Google Ads, YouTube. The big thing is cloud. I mean, cloud is ramping up massively on a revenue point of view, and from a profitability point of view, they're starting to really increase the profitability as well. The other thing that I don't even talk about, well, I am today, but is Waymo. Waymo is like the other thing that could potentially be a major growth driver for them. You know, you look at the amount of drives that are currently going on with it. If this was a Tesla, you know, that's valued at nearly, 500 billion alone. And that's another wild card that you get in here. And also another thing that's probably worth pointing out is AI. People don't even talk about AI with Google, but people wrote it off. But even that's going to be a very good driver for them. Now, I guess the big thing that is the issue with Google is the DOJ. The DOJ is potentially looking at maybe trying to split up Google slightly. I personally don't think it'd be a major issue. I think that we're going to see some going back and forth about how Google is supposed to be split up to kind of lose its market share, its market control. I think ultimately, at the moment, the big thing that they're trying to cut off is major, sell Chrome. I think ultimately what might happen is they might have to lose the partnership with Apple, where Google is the default search engine on Apple and your iPhones, which Google actually paid $20 billion for a year. And I think that might be the ultimate thing where it ends up. I don't think that'll be a major issue because I think everybody on iPhones will go back and go get Google. And if anything, Google's going to save like 20 billion a year. I think it's more of an impact for Apple than Google. So if that does happen, I actually don't think it'll be too bad for Google. And as well with Google, you got to remember the amount of revenue they make, the amount of profit that they make as well. If you add another 20 billion on top and you throw that into share buybacks, I think that's more than going to make up for that. Balance sheet wise, best balance sheet maybe in the public market, I would say. Really slim levels of debt. 93 billion of cash. They can go out and buy nearly most companies out there at the moment. So yeah, I do like Google. Next one, Evolution AB. So I always get questions about where I buy this. So I buy this on Trading2, and I buy the dual listing. So this is on the Swedish Stock Exchange, but I buy the US listing, which is on over-the-counter markets. That's the one that I personally buy on Trading2. So you can buy either the one that is on the STO, or you can buy the over-the-counter markets one, which is one that I personally buy. Now, this stock has been stagnant for quite a long time, as you see here. Since 2021, the stock's down about 40%, and it's not really moved in the last 3 years. Financially, though, it has moved. It's absolutely delivered massively. 15 times earnings, 3.2% dividend yield, so you're also getting a really nice dividend with this one as well. They are the provider of iGaming for companies. So if I think somewhere around here, they've got their partners of who they are partners with. I'm going to quickly, I should have got this up. So you can see they've got the partners like DraftKings and Paddy Power, FanDuel, Entain. So all these betting companies here, they have casino games. Now, they don't actually do the casino games because they've got so much to focus on already. They outsource them to someone like an Evolution. Evolution do like the live casinos, the games for them, and then Evolution just take the cut. So they've got kind of diverse where whatever company's doing well, they'll do well because they provide, it's like a picks and shovels play for them. And they are in the iGaming space, and especially iGaming in America. We know iGaming in America is going to do very well. We've seen the likes of FanDuel, the likes of DraftKings, and that's only through a few states. The potential for growth in the next few years for iGaming is going to be absolutely massive when more and more states come online. In the next kind of couple of years, we might see New York come online as well, and there's clear growth drivers. So it's only just starting out, and the growth potential for Evolution is very good as they expand, and also worldwide. Worldwide they are expanding into like the likes of Asia, for example. The UK is still doing quite well. They've just recently extended the partnership with FanDuel, which is what you want to see. A major partner in the US, and that's for another 3 years. So that's really good to see. And also they are buying back a ton of shares as well as giving you a major dividend as well. They did the recent earnings. Recent earnings, in my opinion, were really good. Operating revenue increased by 27%. EBITDA was up by 30%. And right now, Evolution, we talked about the PE being at 15 times earnings. On a forward basis, this is now a 13 times earnings. And for me, a company at 13 times earnings that's growing at these sort of levels as they are currently doing right here, and you look at the potential growth that they have going forward, clear growth drivers in the US, you look at the revenue growth, you look at the profit growth, you look at the financial health of the business, it's an absolutely amazing, clean business, buying back shares, paying a dividend. Ownership wise, there has been some insiders, it's not showing for some reason, but there has been some insiders buying the stock as well. I like it. I really like it. Like, this company here, in my opinion, should be at least a market average valuation of 20 times earnings. So I'm nearly getting 100% upside in the next year when this drops to 13 times earnings, because it should be 20 times earnings for a business of this sort of level. Never mind that you're growing, nearly 20% a year and your profit's growing 20% a year. That's a premium company for me. Like, this company should be trading 25, 30 times earnings. And then you look at the growth drivers for next year. Yeah, I think this is really good value. So I did buy some more Evolution, and I will continue to carry on buying it whenever I can. Staying in the same space, gambling.com, I did buy some gambling.com. Same as well, this stock has been a little bit stagnant in the last kind of few years since the IPO, not really done anything, but financially they have done quite a bit. Now, I did a video the other day talking about I bought a new stock, and I went through it a little bit on there, so that's about a 12-minute video. So if you do want more information, you can go to check that video out. But briefly, I'll spend a minute or two talking about it in case you do want a little bit more information about it. So the stock itself, or business itself, is a bit of a acquirer of customers for the likes of FanDuel, the likes of DraftKings, and basically what they do is they get people that come on looking for potentially bets to want to place, like, I want to put a bet on so-and-so to win the Stanley Cup, and what they do is they give the best odds, and then they will send them to that client, and then they'll take a cut for sending them to that potential betting company. A bit like Booking.com, where you're looking for a hotel, trying to get the best offer, you want to go stay in London hotels, best prices, they send you that way, and they take a cut. It's exactly the same for gambling.com. So right now, and this is a company that operates worldwide as well, by the way, and what they'll do is they'll send them to that potential better, and then they'll take a cut for sending them to that way. And as we've just seen with the likes of Evolution, there's a lot of customers coming on through even the UK, Europe, but also the US. So there's still a lot of growth drivers for them. The recent earnings were very good. They grew at very good rates. The profitability ramped up at very good rates as well. And if we look at the past performance of the company as well, once again, a company that's done really well. We've seen the revenue grow at very good rates. We've seen the profitability ramp up at very good rates. They've also got a decent balance sheet, so these guys are also buying a bit of shares back as well, which is really good to see. So I do like gambling.com. I'll keep that one nice and brief because obviously I covered it on Monday, and obviously you guys are pretty up to date with that one. The next one is Celsius. So I did buy some Celsius. I did buy this stock originally back in 2022. The stock did do very well when I did buy it. I sold out my stock and then I started buying back in as the stock started dipping. I did not really realise actually how low this would go though. So I started buying back and it's fallen and fallen and fallen, which has been the more surprising thing. But now I have decided to start buying some more stock into Celsius. Now, the stock is dipping basically because of Pepsi. The good news is Pepsi bought a good stake in Celsius. So Pepsi clearly think it's a serious business. They bought an 8.5% stake, and then they also became the distributor for Celsius. Now, what ended up happening is they took a lot of inventory on in Celsius. They didn't want any disruption. Turns out they ordered way too much. So now they're not ordering any more stock, and that's hurting the numbers from Celsius because when Pepsi order some inventory, they count that as a sale. And if Pepsi aren't ordering, then obviously they're not getting the sale. And what we're seeing at the moment is we're seeing weak numbers from Celsius because of that. But it's not a long-term thing, because as soon as Pepsi go through the inventory and they need to start getting more inventory in, the orders will come back again. So Celsius is saying that basically the worst of it is past us now. We are going to see the end of that inventory issue this month. So hopefully that's all done with. And when you look past the inventory issue, so something like an Amazon, for example, Amazon don't get the inventory from Pepsi. So when you actually look at the Amazon sales, they're still up 21% for Celsius. And when you look at the data for when Celsius is actually bought at the checkout of like Target and it's scanned through the till, that's still actually pretty good. So when you look at the numbers past this blip that they're currently going on at the moment, it's expected that EPS comes back, it's expected the growth comes back, and we're going to start seeing this back in this quarter, not as bad as what we've just seen. Next quarter back up to 6%, and next year, 2025, 16% revenue growth. If they do 16% revenue growth, I will take that all day, because I'm only factoring around about 10-15% revenue growth with Celsius. So that would be very good for the company. And then what we should see with the likes of Celsius is the start of the growth coming back and the profitability ramping up once again. Once again, really good balance sheet here. There's not much debt on the balance sheet, as you can see. In fact, there's no debt on the balance sheet. And they do sit on a very healthy cash balance of nearly 1 billion. The only criticism that I do have Celsius is I would like them to buy some more stock or start buying back some shares, which they haven't done. But Celsius is definitely one that I like at the moment. And that leads me on to the last stock, which is dLocal. So I have started buying back into dLocal. I started buying a little bit earlier in the year. The stock didn't do that well. There was some issues. There was a re-agreement with a major client that basically dLocal made less money off them. There was the issues with the FX in Argentina. And as well as that, dLocal made a lot of investments at the start of the year and the market didn't like it because it was hurting the profitability in the short term. So that sent the stock down massively. Now we're starting to see the recovery happen and the financials are starting to buy back. So I did start buying back into dLocal again. One of the main reasons why is I do like the CEO. Pedro Ant, he came from Mercado Libre, did a very good job. He was a CFO and he wanted to have the CEO role. And he took on dLocal, which to me looks, if you're willing to leave Mercado Libre, I think that's a big sign of where you could see dLocal potentially going. And dLocal itself, they are basically a FX provider for companies that want to expand into major markets. You can see some of the clients that have down here that are scrolling past. So the likes of Zara, for example, if they wanted to sell in the likes of Mexico, obviously there's the FX that they have to deal with, the currency impact, and also there's the fraud as well. Potentially there's some fraud on some of the payments. So dLocal manage all the transfer, the exchange of currencies and potential fraud on some of these payments, and then they send it across to the likes of Zara, for example, or any of these companies that you've seen on the scroll bar, and they handle all the risk basically, and then they just take the cut for it. And like I said, the recent earnings were a step in the right direction because the last couple of earnings haven't been great. These were a little bit better though. EPS, only a slight miss, revenue growth of 13%, TPV up 41%, so once this FX impact kind of calms down, the growth should be a little bit higher. 24 forward times earnings. The company still makes very good chunks of profit, as you can see here, good track record as well. Financial health wise, pretty good balance sheet. There's a little bit of debt on there, but they do have a nice cash balance. They are buying back some shares currently. And if you do look at 2025 numbers, they are expecting EPS to go from 0.46 to 0.61. And we are expecting 25% revenue growth next year. My feeling is if they get anywhere close to these numbers next year, we will see the stock do very well. But the big thing is the FX impact. Hopefully the FX impact kind of calms down and they should have a good year, but that's always the risk with kind of investing into this space. So I did buy some stock anyway, because I did think if they do these numbers and the valuation, I think we could do okay here. And that leads me on to the sells. So I did sell quite a few stocks. I think it was 6 stocks. I trimmed 6 positions. And like I said at the start of the video, this was the most money I've ever made. Obviously I've made great money with the likes of Darktrace when they got bought out and I sold it. But collectively put all this together, it was the most money I've ever took out of the stock market. And obviously the first one was Hims & Hers. So like I said at the start of the video, I did buy some Hims & Hers when it was having these dips. But out of nowhere, the stock was like rallying 50% in a week's time. And on this one here, you got nearly a 60% jump on the share price. I was thinking, you know what? I've just made 60% in a week's time. I'm going to take the profit off the table. One of the easiest amount of money that I made. And while this volatility and these day traders are going on here, if I can have it at good value, I'll buy it. And if it has crazy movements, I'll just take it off. rinse and repeat. I'm making very easy money on Hims and Hers at the moment. So I did make 2 sales on Hims and Hers when the share price did jump, and that was very easy profit to make. Walt Disney, I did trim the position in Walt Disney. Just the reason why is the share price has been on a major rally. I've been buying up the dip, and the position got a little bit larger, and I thought I'm just going to take a little bit of profit on the table, so I locked some profit in on Disney, only selling like 10% of the position as well. DraftKings, as you can see, I did expand in like the likes of Evolution and Gambling.com. I am moving into that space a little bit more. I don't want more of my portfolio in this space just because of the risk point of view. So to buy that, I had to sell some of the DraftKings position, and that's what I did. I locked in a 50-something% return for DraftKings, which obviously, absolutely fantastic that I did lock even more profit into it. The other reason why is that I think DraftKings hasn't had a good year as 2023. I think some of the things that they've done, I think FanDuel have had a very good year. I think some of the partnerships they've done have been very good. And I just looked at DraftKings and I thought, you're not executing as good as what you did last year. And because of that, I thought I'm going to take a little bit of profit off the table. So I did sell around about 10% on my DraftKings position because of those reasons. So it is my second largest position now, and Hims and Hers is my first largest position. PayPal, I did trim my PayPal position by a little bit. I thought the last earnings weren't that great. I wasn't a big fan of the slowing revenue growth. I wasn't a fan of the guide either. And I thought I'm going to take a little bit of risk off the table here. It's back at 20 times earnings. I think at 20 times earnings, if you're only growing 5%, is about fair. And I expected a little bit more of a ramp up than what's currently going on. So I did lock a bit of profit in off PayPal, which I'm fine with. So I did reduce the position. Shopify, I did sell a little bit of a Shopify. The reason why it just jumped so much off earnings, and even though the value isn't crazy, I just thought it's a bit of a jump, is that one? So I just decided to sell off 10% of my position and cash some in there for, I think it was like a 50 or 60% profit, which was obviously really nice. And the next one was SoFi. SoFi, I think, is about an okay valuation now. It's definitely not cheap. Only a year ago, how long were we talking about SoFi when it was stuck in this range? And I was going, at some point, the share price will be reflecting these financials. And then we click our fingers, and then the stock has been absolutely on a rally and up over 133%. So big jump in the share price. Not that I think it's like overvalued, but just because it's had such a big move up, I thought, okay, I'm going to lock some profit in. So I did sell some of my SoFi position. I think I sold around about 5-10% on my position there, and I locked in over 100% profit, which is obviously fantastic. Just because it's moved up so much, I think it's, I thought I'd lock some profit in. Obviously, I hope it carries on going up, because in the long term, I've still got a lot of my money tied up in SoFi. But yeah, just taking a bit of profit off the table. You never go broke taking some profit, do you? So yeah, as you can see here, there was a lot of profit locked in, which is really good. I am sitting on a chunky cash balance at the moment. With that cash balance, I'll probably just keep it on the side, because I do think the market is a little bit of an extended valuation at the moment, and if any opportunities do come, I will deploy it slowly into the market. The other thing I've kind of got an eye on at the moment is I'm thinking of diversifying and buying another investment property out of the stock market. So we'll see what kind of happens in the next kind of 3 or 4 months. I'll have a better idea where the market's going and other things as well. So yeah, I'm open to a few things at the moment now, because obviously I've done... The 2023 was a really good year in the stock market. 2024 has been probably even better. So it's been really good 2 years now. I've made a lot of money, and I'm just kind of deciding where the next step for me is at the moment. So that's I might do a video towards the end of the year talking about everything like that, where I'm potentially going next year. We'll see what happens. But yeah, I hope you enjoyed the video anyway, guys, and I'm not doing any more videos this weekend. So next time I'll see you is on Monday. Have a great weekend, guys. Unless you're on the Patreon, I'll do 2 exclusive videos on the Patreon, but I'm not doing any more videos on YouTube this weekend. So have a great weekend, guys. See you in a bit.